Okay, now slide. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be giving the Asian Session Live Market Analysis and the Forecast webinar for this week, 21st to 25th of March 2016. And today we are on 21st of March between 5 and 5:30 GMT. I'll try to explain the forecast, what is expected to happen, session-wise forecast for this particular week. And also I'll do the market reading using the initial lows and the highs, which are noted down around 3:30 GMT, to find out how exactly the market is expected to behave during the day. Besides, I will also give the range in which the currencies are expected to swing during this particular week. And those of you who want to follow more and want to get more details, the contact details are given here. My email ID is dr@i-knowindices.com, and my Skype chat ID in the event if you want to just have a chat with me, iknowindices@hotmail.com. My website address is given here. i-knowindices.com is the name of the website where you come across the forecast and also the trading strategies, how to handle the market during different market conditions. So there are three components involved in our trading strategy. First of all, we follow the algorithm-based statistically derived forecast for the broader outlook of the market. Then we fine-tune the forecast using the market reading live using the live market code page, so that we are in a position to fine-tune our entry and exit. Then in the event, if the market goes against, because that can happen as long as we are human, our calculations can go wrong. And in the event, we should not become helpless, or we should not go in for a distress trade. Instead, we use the trading strategy beforehand, use the hedge order in last making position. As soon as the position is taken, it start making the loss. Then later on, it start making the profit. So as long as it is making loss, we keep the hedge order to limit the risk. And once it start making the profit, then we keep stop at entry and remove the hedge order so that we don't incur any loss. Then we try to maximize the profit by making the stock into a trailing stock. So this way, we try to handle the position irrespective of the derivation what we do. Still, we use the trading strategy, because ultimately the trading strategy is the one which is going to limit the risk. Because if you do not have a mechanism to control your risk and you try to keep only a mental stop, then the players are there to kill you, because they make such quick moves in the market. Then you find that you don't have an exit option, otherwise going for a distressed liquidation of the position at the mercy of the player. So when they suddenly make a drop, when you try to sell market, it doesn't get filled. Then you have to continuously do it and see that at the lowest level, we sell, later on the market bounce back. So this is what they try to do it by inducing fear to the traders. They want them to go in for a distressed trade and lose their equity. So whatever the technicals and fundamentals that trader learn, he fail to recollect those things once it becomes the equity management, because he is not in a position to handle the position because it starts making big loss. At that time, he is not in a position to understand what technical says or what fundamental says, etc. And such quick moves will give the impression to the trader that the account might be blown out. So he has got no other choice than to cut the position. So this is how day in and day out, they make such quick moves in the market. They make initially subdued move, like today you come across very subdued move in all the currencies. So once such subdued moves are seen, Then the traders look into the technicals and try to take some positions, either by developing a bullish or a bearish feel. Then later on, the players understand that the traders have committed more positions. Then they make one whipsaw move, one downward, one upward. So those who had taken the long position thinking that euro will go up will stop out. And those who had taken the sell position, instead of booking profit out of greed, they try to maximize the profit because they feel that it has breached the support and so it is likely to go down in a big way. Then he waits for the drop. Suddenly the players gain it using some excuse and hit the stop of such short seller also. So if you become emotional, the players trap us either way. Whether we are bullish or bearish, they trap us. So we have to understand that trapping is the strategy of the player. So they create the market sentiment and induce the traders to become predominantly bullish or bearish, and later on they just make the move opposite to that of the trader using the data release as a trigger. And the excuse they give for the data release may be unbelievable, but that is how they make it. And then you know that after that FOMC, nothing has happened, but simply they just created that Fed is dovish or they are expecting something else and started gaining the levels. So this is the way they try to make the surprise moves to that of the traders. So ultimately what is important is we need to understand their intentions. There are two ways of understanding their intentions. One is based on the forecast. So I have developed the forecast algorithm, which is a very sophisticated statistical analysis. With the help of that, I'm in a position to give the session-wise forecast. So on a daily basis, each session, how exactly they are expected to make the moves in the market. Swing and firm up means they will just make a lower level move and slowly gain the level. Swing and slide means they will make the higher level up and down move and then start making the slide come to the low. Then again they make a brief downward stop and start making the rise. So this is how they try to do it in a 24 hours market cycle. So we need to understand how exactly the players make moves. So for that, I have given the timings of the sessions. So these timings might look different from that of what conventionally the analysts try to say, that as the European session, London session, New York session, and Pacific sessions, etc. So basically, they are all to misguide the traders. And what the players follow as the session timing, we need to understand. Only then we will be able to understand what sort of moves they intend to do. So now after the daylight saving system in US, the European session gets reduced to by 1 hour. So it gets over by 13 GMT. Then 13:30 GMT, the US session starts and gets over by 20:30 GMT. From 20:30 to 0030 GMT of the next day is the gap time before the start of the Japanese session. During the gap time, they make the false move to hit the stops. And during that of the sessions, early and the late session, that is first 1.5 hours and the last 1.5 hours, they try to handle the majors. During the mid session, they handle the crosses. So this we need to understand. And then during the early session, they make the swing and firm up during that of the late session. So during the early session, they make the higher level swing and slide during the late European session. Then during that of the early US session, they make the swing at the lower level and then start rising it. So this is how the intraday moves are going to be. This is a forecast or algorithm based derivation. Now we have to go in for the fine tuning of it. And before that, let me explain to you the forecast for the week. That is, tomorrow they are expected to make the dip and the rise during the Japanese session and firm up during the European session and slide during the US session. And you know that this week not much of an events are there, and Friday you come across Good Friday and it will be a holiday in Europe. So invariably the volume might be relatively thin, but still the players will try to make the moves in the market. From Wednesday, they are expected to make the rise in the case of Euro and GBP, and also before that they are expected to gain the levels in the case of USD and USD CHF and also USD CAD. So denominator currencies, they will try to gain the levels till Tuesday, and then later on they will try to rise the levels in the case of numerator currencies as well. And for weekend, they will try to hold the denominator currencies after the gained levels and rise the numerator currencies to induce the traders to go in for the short covering. That way, they try to shift the trading zone to the higher levels. So you know that euro has come from 1.08 to 1.13 level. GBP has come from 1.38 to 1.45 level. So this is how slowly they shift it. So the shift in trading zone on the upside is in the process, and you'll come across that next week they will make more aggressive upward moves in the market. So next week, 28th of March till 1st of April, so that will be the month end of the new month beginning time. They are expected to make very volatile and quick moves in the market, and they are expected to make less drop and more gain moves in the market in order to trap the traders and also to handle the derivative market. Now, these are all the expected ranges in this particular week in which the currencies are expected to swing. Every week I give, and also I reviewed on Friday how exactly they follow it almost closer to those levels. So 1.1250 could be the low and 1.1550 could be the high in the case of euro, and 1.4450 to 1.4850 could be the range in the case of GBP, and 110.75 to 116.25 could be the range in the case of USD yen, and 96.50 to 99.75 will be the range in the case of CHF. Then 1.2950 to 1.3375 will be the range in the case of USD CAD, and Australian dollar could go from the 0.7550 to 0.7925 area. Okay, there is a question here. Is the past you mentioned that February, March, the time to take long positions in euro and GBP. Is this still the case? Yes. Yeah. Now you can, on tips, you can buy the positions, take the positions in the case of euro and GBP, and slowly you'll come across the market making the upward move till closer to the elections, US elections. Now, in order to do the fine tuning of the market forecast, we do the market trading. What we do with the help of the live market code page, we note down the initial lows and the initial highs by 3:30 GMT. So currently you come across 5:14 GMT, but 3:30, end of 3:30 GMT, I note down the initial lows and the highs and see after that whether they are breaching the high or breaching the low, in order to understand what sort of moves they intend to do in the market, so that we'll be able to fine tune our entry and try to take a buy position during that of a downward stop and below that of the low, or during that of the extended move on the lower side as a quick downward move before making an upward move. So the market reading also confirms the trend, what is being explained by that of the forecast. Only thing is, market reading helps us to fine tune our entry point of it. Now in the case of 1.1260 is the low, 1.12685 is the high, they are not breached the low or the high, and it is in a nominal positive net change of 2 pips. And in the case of JPB, 1.4444 was the initial low. They just breached it by 3 pips, came down and still holding it. Probably they might hold it for another 30 minutes or 1 hour and then start making the rise without much of a downside move. 1.4468 is the high which is not breached. And in the case of N, 111.22 is the low, 111.59 is the high. They not breached the low or the high. Then in the case of CHF, 96.89 is the low, 97.07 is the high, which they are also not breached. Then in the case of CAD, 1.3005 and 1.3070, the high and the lows, they have not breached it. Even though they quickly gained the levels from the start, in the case of the commodity pairs, USD, CAD and Australian dollar, they dropped, but still they are not breached the low or the high. In the case of Australian dollar, 0.7569 is the low, 7603 is the high, they are not breached the low or the high. So excepting USD yen, sorry, US GBP, no other currency they just made the stop point. So it appears that in the case of GBP alone, they are just making a brief downward move in order to induce the bearish feel for the traders. And later on, when the traders take positions, they will try to gain the levels from that of the US session. Now, with regard to the recommended trades, which can be followed in a demo trading account, so as usual, I'll keep 1.1260 is the buy limit order in the case of Euro, with 30 pips take profit order and also 30 pips below the hedge order to limit the risk. This is not being filled. And I kept the buy limit order in the case of GBP 1.4444, and now it has gone below that, so it has become a buy position. $1.4444, and I kept the hedge order 30 pips below 1.4414 and take profit order at 1.4474. Then in the case of yen, they have to come down. Then 111.22 near the low, I kept the buy limit order. Then exit for that is 111.52. So it is not a sell order. It is only an exit in the event if the buy is filled. Then sell stop is 30 pips below that. So these are all the position I think of during the start of the week. And once they make the week beginning false move, we can take some quick positions and then try to maximize the profit. As I explained to you on Friday, that in US, the daylight saving system is on. As a result, the European session gets over by 13 GMT, and 13 to 30 GMT is the gap time before the start of the US session. So this is how it happens now. From next Monday onwards, we'll come across Sunday, the daylight saving system is on in Europe also. Then what happens? The Japanese session will get over by 7 GMT. 7 to 7:30 will be the European session. And then 7:30 to 13 GMT will be the European session. And same. So here you find the gap time will get changed to 7 to 7:30 GMT. Japanese session will lose 30 minutes. Then European session will gain about 30 minutes after the losing of 1 hour to that of the US. So that is how the timings are going to be from that of next week. And then the players are expected to make very aggressive moves when the traders start taking more and more positions. So as you come across the trend becomes visible, the traders try to take more positions and they try to commit more volume. So in the process, you know very well, the players create the market sentiment and act against that of the traders. So once that analysts find that the market is bullish, so they start recommending the buy position. Invariably what happens, the traders take a buy and wait near that of the support level and wait, and the players make one downward stop and then go up. So then the trader loses the position. Then the analyst recommend going for a breakout trade. So let them breach the resistance and go above, and then you try to take a buy position. So what happens? The traders also try to take buy position once it breaches the resistance and goes above. But what the players do, they use some other rumor and make a big drop from there. So the traders who had taken a breakout trade buy after the rise loses the position and stop out. Then later on they continue to gain the level. So if the traders plan anything of that nature as a big trading strategy, like the 1:3 ratio, risk reward ratio, etc., the players are here to trap them. So the only way by which we will be able to escape from such traps of the players is using the hedge order instead of the stop. If we use the stop in any way, thinking that you are very smart, the players are also much smarter, and they get the inside information where the cluster of stops are, and then they try to hit the stops. And also, in the case of financial institutions, smaller institutions, they trade without a stop. But only thing is, if the margin erodes more than 15%, they are forced to cut the position. So the players make such extended downward move during the monthly trend reversal time. What happens? The big institutions, even though they trade without a stop, also lose the position. So the only method by which we can really escape from the tricks of the player is by using the hedge order, rather than simply telling that if you use the hedge order, you do not know how to trade. Because see, if you want to drive a bicycle, you have to first of all balance yourself. And sitting on the two-wheeler, you should be able to balance. And if somebody says that you do not know how to balance yourself, so you cannot drive the cycle, so you don't just give it up. Instead, you have the precautions of wheels on either side, like a small kid's cycle, and then you venture it. So in the same way, it doesn't mean that if you use the hedge, you do not know how to read the market. You are using the hedge as a calamity preventer, because many of the traders continue to trade using the stop. And however expert they might be, however experienced they might be, they find that they are in the same level, not progressing much, because what they earn slowly, they lose it in one go, because they become emotional and then become distressed because they fail to follow the trading strategy of using the hedging. Instead, they try to use the stop. Then once they use the stop, they become afraid. Then they will say, okay, my equity can hold the stop 150 pips or 200 pips away from the other market. So I'll be very safe, because if I keep the stop, the players are going to hit. But if we does it during that of the month end time, the players will simply use somebody's speech, the BOA governor speech or ECB president speech, and simply make one quick downward move and then reverse. Or Fed chairman speech, they simply make one downward move and reverse, and it will be a surprise for you that you are stopped out and most of the equity is lost, and then later on the market moves in your direction. And you know that last week, before that of the ECB press conference, they made such a big downward move in the case of euro, and suddenly started making the rise, creating a big hype that European economy is going to recover just like that. No, nobody needs to do any hard work. but still economy will grow. That is what they made the moves in the market. So ultimately, you have to understand they create the euphoric condition. In the euphoric condition, you fail to understand the logistics behind such moves. Then you become surprised, and that is the time they are able to snatch your money. So never become emotional and try to see that you limit the risk so that you don't undergo any such distress trades. So let me answer to the questions which are asked here. How is the GBP, Euro GBP cross? Euro GBP cross is expected to slowly gain to 0.81 level. And then later on, you could come across more drop. And afterwards, you come across, they will hold around 0.80 level for a prolonged period and dump. So in the process, you will find slowly GBP will gain first in order to change the market sentiment. Now you find GBP made more drop when compared to Euro. This is mainly to create the bearish sentiment, but at the same time, they are also making a dip in the case of USD as a contrarian move. And in the case of commodity pairs, they made just big USD gaining move. So this is how they make the weak beginning false move, and later on the contrarian move, and later on they make their own decisive moves. So from time to time, we have to read their intentions. Besides using the forecast. The forecast is nothing but reading their intentions in a larger time frame and fine-tuning it using the market reading, so that you'll be able to really make 100% profit on all your trades. So nice to see you back. Thank you, my friend. Any other questions? Can you please display the slide for the session-wise forecast? Yes. Okay. And this webinar is being recorded, so you will be able to see it under the recording of this webinar, which will be displayed in FX Street and also in my blog. You can see that in iknowindices.com/blog, you'll find my forecast is being, these webinar links are being displayed, and then you can go to the link straight to FX Street and listen to that anytime during the week. So let me also show the slide for the range in which the currencies are expected to swing. All the currencies are expected to make alternative moves and gain the levels. And the shift in trading zone, upward shift in trading zone, is in the process. So alternatively, the numerator and the denominator will try to gain the levels. So that you keep it in mind. Don't simply think that when Euro is gaining, USD yen is going to drop, because I see in the heading in FX Trade that USD yen is heading towards 1.06. That is how technically it will appear, but the players are expected to gain the levels in the case of USD yen also. That is the way they gain the levels in numerator as well as the denominator. As a result, Euro yen will gain substantially. That is why you find many of the analysts, when they read separately Euro, read separately yen, and find the move of Euro yen as a surprise. And later on they say simply, the move in the case of Euro yen determines the move in the case of yen. That is wrong, because they are perceiving it or assuming it that way. The players only make moves only in the case of the majors. With the help of that, they bring in the moves in the case of the crosses. Because see, ultimately their basic idea is to earn money by making moves in different currencies. So when they make big moves in the case of Euro and GBP, they make big money. In the case of crosses, the volume is relatively less. So they will not focus on the crosses most of the time. They will focus on the majors. But they do make the contrarian moves in order to bring the volatile moves in the case of crosses, because in the case of crosses, even though the volume is less, the spread between the bid and the ask is high, and also the put value is high in the case of Euro, GBP, etc. Then they are able to make money. So ultimately, keep in mind the players do not have any sort of sentiment towards any currency. They are here to make quick moves in a market, to make billions and billions of dollars, nothing more than that. Okay. What could be the high level for GBPN this week? GBPN, when they gain the level in the case of GBP as well as USDN, from that of by weekend, we should be able to see in the case of GBPN, because normally I do not want to give in the case of the crosses, because the small traders, without understanding the risk involved in crosses, they try to take position and wait when they make one extended downward stop and they are blown out. So from then 160, they are expected to take it to 164 level. Because small traders, if you focus on Euro GBP, you will be able to consistently make money, rather than going for a high risk, high reward trade and lose it other way out. Do you see USDN rising this week? Yes, USDN is expected to make small swing and then a rise on the upside. The downside is much limited. Below that of 111, if they come and form the new low around this 110.75 area, and mathematically this is derived, so slightly they may just breach or come closer. You watch how exactly they stop cutting that for more than 30 minutes to 2 hours. Then you try to take a buy position. Then you will be able to see that they are making the moves. Whenever they are making the contrarian move, wait for the contrarian move to get over. Because at that time, if you try to take the position in major, immediately they may not make the big move. Because when they make such contrarian move, it is to handle the cross. So the crosses will make big moves, but the majors may not. So that you should be able to understand. Then commit position, you will be able to easily see profit in your trades. So understand what they are playing and then commit positions. There is another question. Do you think the stock market is expected to gain the levels? Yes, stock market is also expected to gain the levels. And that will be a surprise for many, that stock, commodity and Forex, all the markets are expected to quickly gain, and then we'll come across big liquidation before the US elections. So that you have to keep prepared. I will be anyhow explaining to you when to exit, when to do the sell and buy trade in the market in order to capture big profit. So I'll come back on next Monday and give you the forecast for the next week. So meanwhile, if you have any doubt with regard to the forecast, you can refer to my blog and ask the questions there, or you can ask the question in FX Street under the recording of the webinar, or you can send me the email or contact me through chat and then ask. I'll be able to help you in understanding the market. Okay. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and I'll also thank you for your kind presence and wish you all happy trading. See you next week with abundant profit. Thank you. Wish you all the best.